Good morning, traders. Welcome to Admiral Markets live webinar. My name is Chris. We're going to take a look at the Forex market, commodities, stock indices as always. First of all, though, if you're on Twitter, you can follow us, follow the content analysis that we send through these Twitter handles, at Chris Horsick, at Admiral Markets. Before we kick off this webinar, please be aware that the webinar is broadcasted to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more information on that. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of the independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so today we're going to take a look at what the dollar is doing. Of course, we know that the dollar has been hesitant lately. Perhaps it is waiting for the new president, President Trump of the U.S., to show its policies, decisions, kind of the direction it wants to go before the dollar makes more of a impulsive move. At the moment, it's quite corrective, but I have a specific view on that I'm going to share in just a second. Regarding what's going on from a calendar point of view, it's good to note that today there will be a court ruling in the UK, United Kingdom, regarding whether the government can, let's say, unilaterally exit the European Union or whether they need actually a majority from the parliament. The first ruling was that a parliament vote is needed, and it is going to be now a second ruling, and I would expect that to hold. So the parliament will probably have to vote on that decision, and after that has been approved, then we would expect the Brexit process to start. So other things, you got in 44 minutes, you have the PMI, for instance, in Germany. You have some GDP figures in UK and US. Nothing major, no interest rate decisions as far as I remember, and no NFP, for instance, or FOMC. But of course, always be aware of these events like existing home sales coming up and other green and yellow tagged events, balance of trade in Japan, etc. You can check that out by going to Analytics and Forex Calendar. Here you can also find analysis, fundamental, technical, wave analysis, of course, articles, etc. All right, with that said, let's take a look at what's going on in the markets right now. I have the wrong profile open. Let me go to my other profile here. Basically, my view at the moment is that euro dollar is at a major resistance spot. The euro dollar here is at the 78.6 fib, and it is, I think, at a very significant resistance spot that will most likely see a reverse, not a reversal, but at least a bearish retracement or bearish correction. And it could turn out to be retracement. So I am definitely bearish at the moment. It is true that price is in a way in an uptrend, certainly. Look at the yellow lines indicating that. So we see that trend with higher highs, higher lows. So this is a counter trend idea. It is in a way a reversal idea, of course, but I think that the resistance at 107.50, the 78.6 fib, is too strong and will stop price from moving forward. We see multiple divergences between these bottoms. Between these tops. Look at these tops, clearly lower. Look at the tops in price, clearly higher. That's what's called divergence, of course. The difference between those, there's not a convergence there. So another really important factor is that on the hourly chart you can see that very clearly too. In the meantime, this is triple divergence. That's really, really strong, triple divergence. On a 4-hour chart, it is probably double divergence, I guess, if you're really strict in counting. So there are plenty of divergences to go around. And you can see that on both time frames, there's a strong lack of power to the upside here, strong lack of momentum. So I think this uptrend is in serious problems at this moment. You see 4-hour chart, you see that this is still a strong candle. After that, we had a bearish candle and a doji. I think that's another indication of weakness. We already broke below the previous lows, the previous candle low here. That's also another basically indication that I think that downside is likely. If you start to do time factor, you can count 1, 2, 3, 4, 5, 6, 7th candle here, or 7th here, depending if you count this one. I'm not sure. This looks like a double top, so we can start counting here. This is candle number 7. In that case, right here, this is 8, which means that this swing high, swing low is over, and I think that there will be some bearish price action. Now, I would consider myself to be more reluctant to trade it to the downside if price manages to get above 107.60 again. I wouldn't expect price to really break above these highs here, right? So a bit of retracement could happen, a bit of upside, but then I would expect some weakness as it hits this resistance zone, anywhere around 107.50, 107.60. On a lower time frame, 50-minute chart, it looks like this at this moment. You can see some momentum correction like this, and then again downside correction, downside correction. So it could correct maybe back up here, but I would expect resistance in that area. So another, of course, possibility is that price, this is the pivot point at this moment. This is the Admiral pivot point, and if it breaks below that, then basically there could be a breakout to the downside. So those are the two things I'm keeping an eye on. 5-minute chart, you see there is a bit of a correction here at this moment, like this. So it could get up to here. I would put a fib from here to here, like this on a 5-minute chart. Wait for the minus 272 target or the minus 61 per day target to get hit. Look for some price action reaction there, and that could be an interesting selling zone, and a fade for more downside like this. Now, what also could happen is that price basically kind of makes a triangle in here and then breaks to the downside. That too would be interesting in my opinion for further weakness. So in my opinion, I'm, as you can see, bearish. This break happened on this lower time frame, so I think that the downtrend will continue. It also has hit a major resistance level. Another reason why I am bearish. So that's my view. I would consider that to be wrong once again if I see strong candles, maybe on hourly chart, breaking through 107.60 like this. Let me get rid of this fib. If I see a strong bullish candle like this, for instance, like this, engulfing twin with a close near the high and a close above 107.60, something like that, then I would consider myself this analysis to be obsolete. The market is showing something different. The market is showing that this is maybe just a mere correction, a very small correction, and the uptrend could continue. And I would be not looking for shorts. Would I go long? I'm not too certain at that. I would consider it. I'm not really that excited about it because of all of that divergence. There's so much that I'm a bit hesitant of trading it to the upside. What could happen is that there could be one more push up like this, but I would still be scared that somewhere around here very soon there's another rejection and another turnaround. So I'm not too excited about the longs, even if we get some bullish reaction at the pivot point, the green pivot point. Which I don't expect at this moment, but if we do see it, then I'm still a bit skeptical. I would not go short, but I would not be jumping for longs either. There's too much divergence in my opinion. If there would have been maybe a single divergence on the hourly chart, right? Then that's fine. I would still trade with the uptrend here, but triple and double is a combination that's too heavy for my taste. So let's see. It doesn't seem like we'll get that. It's trying to break through the pivot point right now. So it doesn't seem that likely at this moment. So a 5-minute candle that would close below the pivot point here, below this green PP, with a close near the low, breaking below these lows as well, like this, could be a trigger as well. Now, of course, there's a news event close by. That's always a bit of a disadvantage early in the morning like this. And one of the advantages of looking for some setups after the news event, an hour or 1.5 hours from now. So that's something to be aware of. It's still early in the day. But generally speaking, after the news events, let's say, I'm looking for this move right here throughout today. That could be early London or second part of London in the afternoon, first part of New York, maybe even second part of New York. And of course, you're going to have throughout the day the ups and downs, the typical ups and downs, but generally speaking, I'm looking for that. Or if we do get some bigger correction, big, 20 pips, then I would be looking for this. If we do get a bullish candle, once again, just to summarize, then I'll be looking for one more higher high and a turnaround at 108.10, 108, for more downside again. So that's my view on the euro dollar. The pound, I think, is also at a bearish spot because it's hitting the 125.30, 125.25. That's a round level, 125, obviously round level, psychological level, but it's also minus 272 target after price had hit a 38.2 fib right here. So that is a typical fib kind of bounce target combination. That's something we had on the euro dollar too, by the way, which is also showing some kind of fib pattern as well. Here, this is a wolf wave, if I remember correctly. Nenet is using that nowadays a lot. And if I remember correctly, that is one of those as well. So I think that this is the trigger of that wolf wave, but I don't have it on a chart, on this particular chart, but I think that is indeed so. The pound USD therefore is the same. It's a bouncing spot, two bearish candles at the target right here, already indicating the weakness. So anyone who took a short based on that is doing well. At the beginning of this 4-hour candle, you can see moved already 30, 40 pips. Hourly chart, you can see 1, 2, 3, 4, 5, 6th candle, 5th candle, 7th candle. Those are all moments where basically price is most likely finished the swing high, swing low, this move up like this, and we're starting a correction. Now that correction, from a wave perspective, I think doesn't have to go too far in the pound USD, because I was still basically saying that this could be one leg like that, and there could be a bounce at the 38.2 fib, for instance. So a whole lot of space there wasn't, right? But the 38.2 fib doesn't have to be a bouncing spot. At the moment, I thought it seems likely that there could be a bounce at the 38 or 50 fib, but you never know. It doesn't have to bounce. It could just keep falling, especially if there's a lot of momentum. And we might not get that 4-5 wave like this, right? 1, 2, 3, 4, 5. All right, so that might not happen. That's what I expect. If anyone did take a short around here, a conservative target would be the 38.2 fib, and that would be around 70 pips. All right, but considering this as a risk, it's still a good trade, even if aiming for the 38.2 fib. Anyone who didn't take the trade at the target there after these two bearish candles, I think it's a bit late at this moment for the pound specifically. What I would probably need to see, there is a pound hearing as well, by the way, right? So it could be also very news driven and not so technically driven. So that's another factor why it's not so good to trade the pound at this moment. But from a technical point of view, I would probably need to see a push down to the 38, a bear flag, and a break below the bear flag after all the news events are over. That's when I would probably be interested in shorting pound. Or alternatively, if it hits the 38, makes a bear flag like this, but then even breaks the top and starts to do like this, then I would also be interested in taking it to the upside. I would, in this case, be interested in trading it, the breakout of this consolidation zone, to either side, because I think in this case, both sides make sense. But only after the news event. You want to be careful of that. Dollar yen, basically I was expecting, like I said yesterday, a wave 1-2 bounce. Well, the bounce didn't happen at the 78.6 fib. There was a 4-hour candle here, but ultimately it didn't really go anywhere. and then tested the bottom, broke just a tad below the bottom. So technically, officially, it did break this bottom, even though it was only by probably a very small margin, about 2.5 pips. But a break is a break. In this case, there are no exceptions. So my wave 1 and 2 analysis was therefore invalidated, as I said yesterday. Ironically, if the stop loss is wide enough, if the stop loss would have been 5 to 10 pips, what I typically do below this bottom, then the trade is still alive, which is funny, and actually now getting into profit. I personally, if that happens, I, in majority of the cases, actually close the trade because the trade has been invalidated, but I still can get break even at this point, right? So that depends from trader to trader and case to case as well. For me specifically, it would depend if I think that my outlook has changed or not. If my outlook is still the same, I'll keep the trade. If I would think that the outlook has been invalidated, obviously I close it. So whether the outlook has been changed right now, I think is a tough one. I still think that there could be one more push lower, in fact. So I think it's a difficult decision, but I probably would be careful. It could still make one more lower low. It's now breaking above the pivot point, so a trail could also make sense below this low. Let it continue, or if it does turn around, take a very small loss. That could be in kind of a middle road to give it some breathing space, but then not keep the original risk on the table as well. So that could be kind of a solution as well. I think the dollar yen, I mean, I was bullish. This bearish zigzag just went a lot further than I expected. And now I'm not sure if it will make that one more last push down to this fib here, as you can see. I already have it on the chart, the 38, 112. Just needs a little bit, and it will hit the 38.2 fib fully. Or if it will not do that. I mean, looking at yesterday's candle, it's pretty bearish. So I think that is a strong candle. Sorry. That is a sizable candle. It has a close into low. Very dominant candle. I don't think that today would be a good day to keep along. I think that therefore any person that survived, most should have survived that small break. It's probably better to exit that trade at the small profit right now, because I don't think that today will give much. It might retrace halfway, but eventually I would expect some resistance due to this candle and a turn back down to test 112, and I think a bounce at 112 could happen. If today stays bullish like this, that would change things again. Then in that case, this could be the end of the correction. We might see finally that bullish bounce that I was expecting today or yesterday. But I would need to see today end up bullish before I would be able to trade with the upside again, considering this daily candle. Or it finishes its correction at 38.2 fib at 112. Either way. All right, Aussie. Yesterday I was saying I would not be interested in going along because this has lasted quite a while. It's been strong surge. But if the dollar starts to strengthen a bit finally, which it seems to be doing against the pound and euro, even against the yen a bit, then the Aussie will also move along with it. However, probably a bit less. One of the things that we can keep an eye on is the potential head and shoulders like this. So any shorts that are taken, I think that would be probably a good target down in here as a swing target. Intraday targets, of course, pivot points are always a good thing to look for. At the moment, no 4-hour candles. This is a daily chart, sorry. Excuse me. For our engulfing twins here, plus we can see a rising wedge pattern. You can see this is support trend line, and this would be resistance trend line like this. So that is a rising wedge chart pattern. That is a corrective reversal pattern. In this case, it is a bullish, it is a rising wedge, therefore it's a bearish signal. And we see some divergence between the tops, not in the 4-hour, but in our hourly chart, you would see triple divergence. 4-hour chart, we don't see any divergence, which makes the euro case a bit stronger, but ultimately, I think that here too we could see probably the break happen sooner or later. Maybe not right away. We already see that price is bouncing at the S1 right now, a good surge down. So it would be nice if some kind of bull flag like this, or rising wedge again, or a triangle like this, and a break for continuation. That could be interesting. Euro yen, pound yen, I did not see anything interesting this morning. To me, they seem quite choppy and messy. I think that the euro odd is a bit different. Let's take a look. Euro odd has been pretty choppy here too. But if you look at this this break, it seems to be a false break. Good momentum to the upside. A bit of a correction like this on the hourly chart. As you can see, it looks like a three-wave correction. So to me, this seems like more or less like a double or triple bottom here and a break. There could be a breakout, which in a way is interesting. I would expect more weakness on the euro dollar than the AUD USD. The euro AUD is actually looking slightly bullish, in fact. So let's see bullish engulfing twins here. So I would not be surprised. I would keep an eye on this fib on the 50-minute chart, this swing high, swing low. See if price can make a bit of retracement back to the 38, 50 fib, perhaps 61, and see if we can get a bounce in somewhere in there as a continuation up. So that does seem interesting to me. To the minus 272 target, for instance, at NDR1, like this. So I'll keep an eye on that throughout the day. The euro pound is, yeah, it's starting to become a bit of a correction of the correction in the meantime. And I'm not a big fan of trading it, but if anything, it seems like a bouncing spot. It is at the long-term moving average. It's kind of hesitating with this Keltner band, part of the Meditative Force Supreme Edition package of Admiral Markets, which you can find when you go to Platforms, MT4 Supreme Edition. And there's, besides the normal MT4 indicators, you have the Supreme Edition indicators, such as the pivot point, Keltner, but also other things, as you can see here: gravity, high-low, magnifier, mini charts, Renkos, and a lot of other extra things. So check it out. Also, of course, you got WebTrader as well, which is pretty neat feature if you're maybe not at home, or you're looking on a device that is on a tablet, for instance, or even a phone. Very useful to then use the WebTrader. You can then just go to your browser and look at the charts. If anything, it's a bit of a bouncing spot, therefore, but all in all, I would say, not a big fan of this euro pound at this moment. Still a bearish candle, so ultimately, if it makes a retracement like this, a zigzag, it could be good to look for a bearish bounce, in fact, at the moving average, at the R1, perhaps somewhere in here. See if there's a trend continuation there. Now the AUD New Zealand didn't go anywhere so far. This bull flag broke, but then failed breakout. So I'm cautious with the AUD New Zealand again. Good 4-hour pin bar though, right here. So it could be back to a bouncing spot. We got support in here. Looks like a false break with a big wick here. So If anything, it could be in a bouncing spot. We're at 4, 5, 6, 7, 8 candles already. But I would maybe need a bit of confirmation here on a 50-minute chart. See if price can muster a break above this trend line, for instance. Maybe a good 50-minute candle that pokes through this zone. Make a small retracement there, and that could be good for upside. Still a bit cautious with the odd New Zealand. It could get in a position that upside might be interesting, considering this 4-hour candle. All right. Anyone who joined gold in here at the 78.6 fib is doing fine, and depending on your target, you can go to break even or lock in profit. That depends on how ambitious your target is. Last week's candle was still bullish, so a stop loss below that low, if you're want to lock in profit a bit quicker, could be one option. For any new trades, well, I would probably want to see price back to this bottom and bounce and make a hook back. If there could be a double bottom, for instance, like this, it could be interesting then this can turn out to be a consolidation zone, basically, like this, and there's a good chance it will make one more move up. Stock market is mostly going flat at this moment, right at the high. Seems to be a bit of an indecision there. 2 weeks, doji. If a candle were to go bearish like this, then I would expect a retracement to occur back to probably to roughly this trend line. It doesn't even have to go that deep. It might go somewhere to retest these support levels. Let me make that green. Something like that. We got a top in here too, by the way. All right, so depends how big the retracement will be. These are 3 targets or 3 bouncing spots. For the moment, it's going sideways though. Let's see. We got a comment here. Euro pound has head and shoulders pattern on daily from Eagles. So let's take a look. Euro pound daily chart. Yes, indeed. Didn't see that. It is here's the left shoulder. Here's the left shoulder. Excuse me. Here's the right shoulder. Here's the head. Indeed. Good observation. Right shoulder is a bit higher than the left, but that's okay. It doesn't have to be that perfect. The neckline is this line right here. So that's something to be aware of as well. A break below that neckline, I could see then a continuation of the euro pound downwards, like this. Now, before that happens, we can keep an eye on this particular price action. At this moment, there are 5 waves indeed. So maybe an ABC correction back to this level, and that could be another head and shoulders right there. this could be the left, this could be the head, this could be the right shoulder. So there could be a 4-hour head and shoulders that completes the right shoulder of the daily chart, for instance. And we can see a rejection there, maybe back to the bottom like this. All right, now it doesn't have to go maybe that far. First target would be basically minus 272, then the minus 61.8, then the minus 100,000. Sorry, the minus 100 target. The zigzag, one way of doing that could be to put the fib on the bottom to the top and look for the minus 272 and minus 61.8 target that typically line up with these fibs. And you would have basically that as a confluence resistance zone for downside. That could happen considering the fact that this is 5 waves finished. There is divergence between these bottoms, like this, as you can see. So that could happen. Doesn't have to though. Those trends could always last longer. If it breaks this resistance line, then we could see maybe the zigzag to the upside like this. And then the turn at these fibs. But there is double divergence, so an ABC zigzag upwards might occur at this point. All right, folks, that's my view at this moment. Any other questions that you might have, please let me know through the chat. Of course, I always like to get your 2 cents and feedback on what you think about what I showed you. If you have any particular pair in mind, let me know. But these are the ones I showed you. I think have the most were the most worthwhile. But maybe some particular pair with the time frame I just looked at it differently. Would love to see if you have some preference for a pair that might be interesting for us to take a look at. Regarding webinars, folks, we got tomorrow's strategy. We're taking a look at price action patterns. Sorry, that's today. We're looking at Fibonacci and waves tomorrow, of course. Tomorrow then it takes a look at POC zones. That is point of confluence, or some people think, say, point of confirmation, I think, or control, point of control, sorry. So it depends, both basically saying the same thing roughly. Thursday we take a look at trading systems and methods based on indicators. And of course next week we have again a long list of webinars as usual. So looking forward to see you there. So yeah, let's see what the dollar happens. It is a bit of a, basically a bit of a correction, a bit of a consolidation at this moment, but I think that there could be some interesting trades today. Let's see. Pound, of course, be aware of that court ruling, but I think it's going to arrive soon. I think in about an hour and 10 minutes, if I'm not mistaken, but I'm not 100% sure about that anymore regarding the time, but it will be soon, somewhere in the morning, I think, today. All right, folks, thanks so much for joining us today. We'll be back tomorrow, and we'll talk about today, the analysis before, after the fact, what we can learn from it, and we'll take a look at Fibonacci waves and how to apply them on real-life charts tomorrow's new market environment. Wish you all great trading. Talk to you soon, folks. Cheers.